All right, all you devils. Well, there you go. New intro. I like it. All right, so perhaps, hopefully, you caught that the purpose of this is for us to kind of give you the coming soon attraction here for what we're calling Trade Devils 2.0. And the members, of course, know about this. We've been talking about it for months. We've been working on it for over 6 months. For those of you that are YouTube subscribers, just a few quick things to note here. So this. What we're essentially doing is we're recreating the entire, let's call it a platform. So beyond just we of course we communicate through Discord, but all of the educational content, all of the training, everything that's I guess you'd call unique to Trade Devils University will be we're kind of recoding the entire platform and how people access information, how they interact with us. There will be some new pricing features, so it won't be just the single option that you have now for that monthly recurring. We're going to give you some different ways to participate, just kind of stair step into some of the more advanced stuff. So there will be some lower cost ways to participate and get access to some of the content. We're going to bundle up some of the content and make it available in an educational course. We've got some full suite of custom NinjaTrader indicators for day trading for those of you interested in shorter term trading. So all of that's coming in the very near term. So you'll see us start to promote it as we get closer to the launch. The point of mentioning this here is that if you were thinking about joining us at any time really at any time in the past, this would be a particularly good time to move forward with that, because any of you that are any sustaining member, or if you're a multi-month member, you made an investment for, very commonly we'll have people invest for 6 months to a year. Any of those people are going to get grandfathered in, for lack of a better way to describe it, into everything that we offer, right? So there'll never be any additional cost to you if you're a member now and a sustaining member, right? So you can't come in for a month, grab everything and bail, right? We've got to put some protection in against that, right? So sustaining members will have access to everything that we offer, right? You'll be grandfathered in, you'll never pay a penny more. So I thought I would just mention that as we start to get closer to rolling this out. Okay. So with all of that said, 2.0 is coming soon. Now let's get onto the indexes. All right. So I'll get that out of here. All right. So let's start with the S&P. We'll just do the three majors here and try and keep this relatively short. All right. Of course, members, we're always available to do more detailed analysis here, or if you've got a particular trade or something you're focused on here. I'm going to stay relatively long term here. We can get a big picture view of where the count is. Now, this is the count I've been working and we've gone through it in some videos in the past here. And I have to say, this was not a terribly popular count. I got a lot of people suggesting that, right, it didn't look right. Right? And when I first introduced it as the count that I thought was in play as my primary, right, I thought it was, so it's unusual, right? So what makes it unusual is this section here, because I'm still counting this as a 1, but I do think we get this somewhat unusual. We get this ABC into the 2 here with a truncated C. Right, so it's not we never see these. It's just a bit unusual. But again, now at this point where I think it's starting to solidify more, the impulse that has followed here, and as we just hugged on this median line here, I think this is starting to solidify here as a very valid count here, as we now are, we're at a point where we have absolutely no resistance up here. I mean, the only thing the market is fighting is the perception that it's overvalued. Right, but that perception, right, the markets can continue to move higher, whether it's you're thinking of markets climbing a wall of worry, or just the persistent anticipation that it can't keep going. Yet, right? So, I mean, you've heard me say this before. I've featured this in videos, right? You don't want to be a seller up here, right? There's no need for you to try and pick the top, right? Sellers at highs create new highs, right? Those are just the stops, right? That just fuel the ongoing movement here. So with the, obviously, right? We had some volatility lately, right? But look how quickly it was reabsorbed. It was just a blip, right? 2 years from now, you'll barely remember that bar. But at the time, right, that was a free fall in the markets. Right, but the Fed is, as long as the Fed is this accommodative, all right. I mean, there's barring, excuse me, the unforeseen event, right, or the geopolitical risk, right, which is certainly still a risk, there is nothing to keep this market from continuing on. Right? Even the count here, right? This is, I mean, it shocks me to be putting up Elliott counts here that have the market going this far. Right? I was a little uncomfortable with it when I first put it up. Right? All I'm doing is applying the Elliott Wave Theory here. 1, 2, 1, 2. Looks like we're in the process of finishing the third relative to this degree. So, right, as you can see it here, it's just, we would just be 1, 2 looking for the third. Now, right? So it's nothing you haven't seen me talk about 1,000 times. Here's the high probability zone for the wave 3 relative to this degree. So you can see why I've got this wicked out here. Right, so here we go. Right, that's that. And now as we have now broken through it, right? So so this is trading principle number 3 of in Andrew's work, is that if we're not going to pivot at the median line, we'll hover around it. It's sort of a gravitational magnet here before the market decides which way it's going to go. Right? So at this point, now we're pushing in and hitting all-time highs. Hard to imagine that we're not going to go up here, at the very least, complete this impulse. Right? So that would put us right in that zone. Maybe now we set up the 4, come down to the lower parallel, but we're still trying to complete the third at the larger degree. So this is, come here, where are you? This is what we're after here. So if this is the 1 and this is the 2, granted, it's shallow 2, just barely, didn't quite even make the 38. We're looking for the 3 up here, right? So here's 100% of that move right here. So now we're not quite there yet, but if we get up to this kind of a range, now we confirm that we've got a contender, right? Just that. It's a contender for the third, which would set up the 4 to the 5, right? So there's, again, there's no resistance up here. It's just blue sky, right? Nothing to stop it, right? At the moment here, let me rephrase that. Nothing technically, no resistance we're going to run into here to stop this. So as we sit here, is there a trade here? Well, you guys know I'm not a breakout trader. Sure, I've been trading all day, right? So day trading, yeah, lots of things. But for a position swing trade, yeah, it just goes. I can't do that. I literally everything in my body screams at me that no, we don't break. I'm not a breakout trader, right? I'm a retracement trader. So for me, unless you're day trading, there's nothing to do here. You got to wait for some retracement. Now this, right, so here out at this at an 8 hour, looks like, well, let's go down here. Let's go to a 1 hour. Looks like, hey, man, well, look at that, look at that great retracement we got here. Right? Well, all we got was just an ABC. ABC is all we got. Gave us the 4, right? We didn't threaten the 1. So, just standard, same thing I do every video, every time, right? So we came to the, got a little high volume node there. Right? We're between the 50 and the 618. Now, granted, that's deep for a wave 4, but considering what was going on in the backdrop, it's not that radical. So what do you got here, right? It looks like we're in the 1. If this is the 5, right, there's been, even here at 1 hour, there's been no pullback. So before there's an opportunity, we need, well, I would propose a reasonable trading opportunity that would have the right risk-reward components to it. We need some sort of, but I'm not saying we've got a top here, but at some point, I'm just demonstrating at some point we got to get a retrace here for us to be able to participate in this for a swing trade. Day trading, well, unbelievably good volatility. And I should mention that, right, because we're not known for this, but all of the day trading that we do is all through NinjaTrader. We've got this tool suite we've been working on it's been almost a year now. It's going to be in the $1,600 range for everything that we offer. So pretty sweet perk to get access to that for the monthly that we're offering. Right? And that will not last, I promise you that. So if you're interested in day trading and you're a NinjaTrader, well, we'll be demonstrating what we've created there. In the couple of weeks here, but not to digress here. So this looks like, if that's the 4, sure. I mean, you can almost, there's just been no retracement here, right? So where's the 2? We don't really have a contender for the 2. Here I'm even down to a 15-minute. Right? So if that's the C, just a raging bull, right? At some point, right? At some point, it's going to come. There'll be a correction. It's going to be one mother of a correction when it comes, but there's no. It's a fool's game to try and pick the top, right? Somebody will get it, right? Somebody's going to be a hero, right? But do you want to put money at risk for the hero play, right? You don't need to do it. At no point do you ever need to be picking the top, right? Trying to sell these tops. There's just never a reason to do it. Much smarter way to wait for the retrace that fails to get the high and take that, right? Just always a smarter way to do it. Right? But somebody will get it, right? They'll trumpet it all over their Twitter feed. Hooray for you. All right, how many tries did it take you before you got it? Something to keep in mind. Okay, let's go. Let's keep moving on because I don't think there's much to do right here as we're putting in new highs. Nothing to do on the ES. The YM is pretty much the same thing. We go back to the 8-hour. I mean, of course, these counts are going to look very similar. Right? So 1, 2, same thing. Truncated C per my count. That's what I'm working off of. Let me get that dialed in right there. Right? So A, B, C gives us the 2. I know it's a little unusual, but now here, interestingly, for the for the YM. So sorry. The YM, the pitchfork. Well, you could go with a modified pitchfork, but this trend line here, tighten that up here. With these, all of this looks so good that I was kind of drawn to putting the channel on that. Now here we're pushing on the other side of it. So if this is 1, 2, and we're looking for the 3, that's relative to where are you? That's relative to this. So 1, again, assuming that's correctly identified as the 2. Well, here's the 1618 that we'd be looking for before coming down for the 4 and the 5. So, again, right? Do you want to be a buyer here at all-time highs? I just can't do it, right? Because the reason I can't do that, because if this starts to turn, it would be such a break of all of my trading rules and the discipline I've spent so much time building. It would just do so much psychological damage to me that I'm willing to just let it keep going, right? For a swing trade, until we get a deeper retracement, I just can't buy that, right? I think the risk reward is way, way, way too high for a swing trade, right? And again, that's my opinion, right? Feel free to disagree if you're comfortable buying that. Jesus Christ, man, look at them. There's a little heat there. Now you can see that. Again, I'm down on an 8-hour here, so you can see the volumes falling off a little bit here. Right, we've been mighty hot, right, since we, barring the little geopolitical event that we had, but quickly absorbed. The market's very hot. There, you've got what you can see. There's just all sorts of structural support. Should we even start to come down? I mean, we've got this, right? This structure right here, right? Low volume node. We've got this here, which is tied to a high volume node, right? So we can kind of just all tie that together. So if I put that right on that, so you can see likely to be some support. So if we were to get any sort of retrace, that's where you'd be looking for it. First here, second here. So until we have something to start measuring, until we get a pivot where we can say, all right, that's moved far enough that we can call this, it's some sort of a pivot. Right now, it's just clear sailing, right? So this 100 here is relative to this 1, 2. So before we can really say, okay, I've got a 3 here, as in this 3, I got to get 100 here. And that would suggest here, if that's the 100, look, here's where to this 1. Let me bring this down. To this 1, 2, well, here's the high, here's what you're looking for that. All right, so this potentially just keeps going. So this would have to move up. Seems a reasonable spot for that. Yeah, right. So you look at that and you go, well, okay, man. Well, Sam, so why can't I buy that? Well, because the risk here. So I mean, we're on an 8-hour chart. That's a massive stop. Right. Assuming you're going to use the low here. Look at the Vegas waves holding it. Right. As we go up, up, up. I'm just trying to patiently wait for a decent size retracement where you can get long again. Until then, I think you're either day trading very short term, or you're just kind of waiting on the sidelines, waiting for a retrace, right? So you can get a decent risk reward profile. Moving off to the Nasdaq, pretty much the same thing. Right, now this one a bit interesting here. Look how the median lines here. So I'm using these pivots here. So I'm using the 1 through that truncated C pivot here. Look how we're doing right here. We're just tagging the median line. We hadn't hit it all the way, just got it. And note here what we got. There's the 100. We got it. We got the 100 relative to this 1, 2. Right. So this is the 1. This is the 2. We just got 100% right there as we hit the median line. Now, does that mean that's the top? Well, could be, right? So nothing says it needs to stop there, but you're seeing a little reaction as we hit the median line. We know algos use this. So is that our pivot? Well, if this is 1, 2, now at the next degree, if this is 1, 2, we're looking for 3 right here, right? So that would be 3 here, 4, 5. Well, maybe we get back to the median line. Maybe this is back up here. Let's get you above it. Right, back to the median line. Wouldn't surprise me at all. Right, again, no resistance. Nothing to keep it going higher other than people's anticipation that it can't keep going higher. Right, could we get a pivot there? I mean, that's an interesting confluence here. We're at the 138 and the 100 relative to this 1-2. We could, but does that seem likely? Maybe you make the case you've got some divergence here. You can see it. Well, let's see. You can see it a little bit more easily here, but of course that can change. You can certainly see it. Come here. Certainly see it right here if I can get this thing to attach. Right there. So we've got some resistance, and of course you can see it here in them. But the day is young, right? So in the Weiss wave, which is just a simplified way of looking at the volume, right? You can see a little divergence here, but again, I wouldn't be calling the top there just yet. Well, now if we were at this at a 1618, I might be. I still wouldn't be selling it, but I might be a little more. I might be thinking that potentially I've got a pivot here that might set up the 4. So I might be on the hunt for the 4 a little more so if we were a little bit higher. Now, if we get up here and get that upper edge, right, so here we'd have to get it at this point where you're going to get it, right? So just the trajectory, we're not likely to get it here. Now, if this is just like the S&P, if we're going to get through, looks like you could be going that high before you get that, if you're going to stay within the confines of this set of median lines, right? So right now, first thing is we got to get through the median line, and we're not there yet. So just amazing strength, resilience in the indexes. Don't fight the trend. Don't fight the Fed. You've heard it a million times. This is maybe in stock market history the best example we've ever seen of that. All right, guys, there you go. Well, so again, I remind you, if you're interested in what we're doing and what's coming with TD, I want to abbreviate it, for Trade Devils 2.0, this would be a good time to reach out to us. All right, guys, talk to you later. Have a good